Hey, good morning, everybody, and happy April Fool's Day to everyone turning in live or watching this recording later. I hope that you are in for a treat today, a surprise. Somebody does an April Fool's on you. I actually thought, oh, maybe I should go on early or go on late this morning, kind of give an April Fool's, but welcome to the Mic Drop Show. This is where we bring clarity and structure to real estate finance, and real estate strategy. I'm Mike Morawski, and I'm here every Wednesday morning at 7:30 Pacific. Yes, 7:30 Pacific. 9:30 Central, we take a closer look at the framework that actually protects investors, whether you're a passive investor or whether you're an active investor. We dig in deep. Today's April Fool's, a day built around misdirection, assumption, and things not being what they appear to be. And we're going to dig into that a little bit here this morning. I want to make just a side note. Hey, if you have any questions, if you have any comments, put them in the chat or DM me. Like to, interact as we do this. If you're somebody feeling like, hey, I'd like to be on that show with him one morning, you know what? Reach out, send me a message. I'd love to have a guest on from time to time and talk about real estate and talk about some of those misconceptions, misdirections, things that are misunderstood somewhere in some of what we do. This makes a fitting backdrop. April Fool's makes a fitting backdrop for conversation about passive investing today. And that's really what we're going to talk about. So if you're a passive investor, if you're someone who likes to invest in real estate, not get your hands dirty, but you want to be in the business because that's where wealth is going to be created, well, this is a place for you to be. It's very interesting to me. We've really started to heavily underwrite again. Here we are, 2026, the market's shifting. And if you're not aware of that, you should be paying attention, because if you're waiting for mainstream media to say, hey, the market's changed, the market is shifted, things are on the uprise again, you're going to miss the first 2 years of this. I've said for 3 decades, I've been in this business over 3 decades, and I've said for 3 decades, if I could just get in and get started before that market changes and have all that wind at my back, you know what? This is where wealth gets redistributed, and this is your time. So, we're right there. We're right on the cusp of it, and we can tell by some of the deals. I've seen an increase in deal flow over the last quarter, right? Here we are, the end of the first quarter of 2026, April 1st, brand new month, brand new quarter starting. Are you starting to see things differently yourself? Are you starting to maybe reevaluate where you're at, where your position is at? Maybe it's time to come out of the stock market a little bit and go into alternative investments. These are questions that you have to ask yourself and answer for yourself. This space sometimes can be the space where the biggest mistakes aren't loud, they're really quiet. And that's what you need to pay attention to. And one of the biggest mistakes you could make right now is missing it. Now, if you're like me and you've said, I want to get involved before the next gold rush, before the next bull run, this is the time. Really pay attention. I underwrote a deal yesterday, and this is very interesting. So it's a deal that's going to auction. It's 118 units in a primary market, in a great market, a C-class property in a B-class market that we know it's completely vacant, completely boarded up. And I think that there is a lot of this opportunity in the marketplace today. But we looked at this. We can buy this deal in the low 30s a door. We know that we'll be able to go in, put about 50,000 a door, gut it from drywall in, rebuild the asset, bring a new B-class product to the market, still under replacement cost. So we're in the deal under replacement cost, which is huge in this market. we'll be able to achieve rents that are above average for that asset because now we have a brand new product on the market, and we'll be able to refinance that deal in 3 years, be able to take our investors out and be able to run that deal for another 10 years beyond that, creating cash flow for people that are involved. So, there is a lot of opportunity out there, and I have a whole model built around that right now. But I've gone from looking at maybe 4 or 5 deals a week on my desk to 20 to 25 deals a week coming across my desk. Now, they're not all good. They're all April, most of them are April Fool's jokes, but there are those nuggets, those needles in the haystack, as you say, So let's dig in. Let's dig into this conversation this morning. We don't look like bad decisions are loud, right? They're quiet. They look like reasonable ones, and they get made with incomplete context. So if you're an investor, you're sitting on the sidelines and you're thinking, oh no, it's not a time to go in. The war's going on. Gas prices are high. Unemployment. You know what? Take another look. Take another look at what's happening. And whether or not you like our political atmosphere right now, take a look at what's happening and where we're headed. More often than not, we start with a simple belief. And it's not straightforward. Here's the April Fool's version of passive investing. You look at a deal, you review that deal, you trust the operator that's bringing that deal to the market, you wire the operator money, you collect returns. No, it's fiction. You have no involvement, no surprises, not true. You know what? As a passive investor, be aware of what's going on. That's the version, though, people buy into. They buy into the overhype. I do a lot of creative financing strategies. And one thing I tell the people that I work with is, look, don't buy into the overhype. Just do the work. Dig in. Do the work that needs to be done. Don't be careless just because a deal gets presented to you cleanly. But dig in, do your due diligence. Don't get fooled by April 1st, right? The problem isn't in passive investing. It's in the design to feel the complexity up front. It's designed to compress complexity into structure. So what we're doing is we're taking what is typically a very complex strategy, and we're dialing it down, making it digestible, building a structure around it. And if you don't understand the structure as a passive investor, you don't see all the moving parts because they're hidden. They're made as April Fools in some cases. You only see the outcome being overstretched, over-exaggerated. That's where the April Fool's joke comes in. Not in the decision to invest, but in the decision you bought into. But in the assumption that what you're going to see is all there. And over time, you start to recognize that there's a disconnect, right? Your disconnect shows up. It's not where things are going well. It's where they aren't going well. When disruptions in distributions happen, or distributions slow down or get paused, when projections shift, when communication changes. Now, one thing I will say, it's not always an April Fool's, because in real estate, time cures a lot of challenges. If you can hang in there, if an operator can hang in there, if you can continue to just nurse that deal, time changes a lot of things. But the underlying structure is really what becomes visible. And for a lot of people, a lot of investors, that's the first time they're actually seeing the deal that they invested in. I always say the due diligence, when we go to LOI and then we go to a purchase sales agreement on a deal, and then we go into that due diligence period, that 20 to 25 days that we have to do the physical due diligence, that we have to do all the books and records, dig deep into the past history of that property. That's where we really reveal the meat. right? What's going on, what things have to happen. You can't just look at the first pass on the numbers. You've got to run those numbers more than once. You've got to do that physical due diligence. You have to do that operational due diligence. Hey, here's something I really like to do when I go to a property, and maybe it's my first time at the property, and I'll go visit a property and not even tell a broker that I'm going. I'll just go show up, drive around, drive the parking lot, drive the neighborhood, walk around, look at the grounds, look at, the amenities. But what I always like to do is stop the tenants, and start a conversation with the tenants that live there. Hey, how do you like living here? If you were an owner of this property, what would you do differently? Kind of interview them and find out. This is, where we really start to reveal some of the pain points, some of the issues, and not maybe even issues today at acquisition, but maybe down the road. A lot of investors just make assumptions that everybody else has done that hard work, but as a passive investor, you might want to do some of the hard work yourself. Don't rely just on others. Don't rely on others' confidence either. Uh, don't let their assumptions be a substitute for structure. And you, as a passive investor, as an equity investor in that deal, you're an owner. And one of the things you want to try and do is preserve your original capital in that deal. And any of that, any alternative investment, or hey, when you go into the stock market, it's a little bit harder to do that, but you want to be able to preserve your original capital. Hey, how many times have you invested in the stock market, and as soon as you bought that stock, the stock went down the next day? But time cures it. It's the same thing in real estate. You go into real estate, you have a little bit of an exodus of tenants that move out because they don't want new ownership, or they think this is a point that they can just leave. So, these are things that you have to take into consideration. How was the underwriting done? How was the due diligence done? Just because the operator is a friend of yours, or you think they've done their work, or you're just believing their story, doesn't necessarily mean it's not an April Fool's joke. So as a passive investor, write these questions down for yourself. What should you analyze, right? What in your own mind are the questions that you ask? The better questions that we ask, the better answers we get, the more answers we get. So what should you analyze? What questions do you have? What are the metrics that matter most? For me, it's one of the big metrics is the market, right? What's the market going to do? Hey, we looked at a really good deal over the last couple of weeks, but it was in a tertiary market, a really, really outlier market. But the cash flow was good, but I just didn't see what was going to happen with that market. And there was nothing that was, there's nothing more important to me than being in a market that's economically diverse and that's an emerging market. What's the best way to vet an operator? Write those questions down for yourself. Don't be afraid to ask that operator after that presentation, after you look at that pitch deck, questions about their past, about their history. Listen, I've made some mistakes, right? I lost $100 million company back in the 2008 crisis. But what did I learn as a result of that? I've learned 5 key things to watch out for in a changing market. And that's what really has made me pay attention. We didn't buy anything in 2024 just because nothing made sense. So, I don't think you want to make a mistake. So here's an issue for you. If you approach this just like a checklist, you'll always feel like you've done enough. Not always the case. Stay involved. One of the things with our passive investors, you invest in one of our deals, if you have an interest in really digging in, learning a little bit more, being more involved, we invite you to the asset management calls, right? We're on with our property management team, depending on the asset, once a week, every other week, once a month in some cases, because the deal is stabilized. We invite our investors to join us, to listen in, to see the questions we ask, the depth that we dig in, to really reveal what's going on. You're not just reviewing a deal, but you're reviewing company values, operator values, personal investment values. You're evaluating deal behavior. How's that deal going to behave under pressure? When I underwrite a deal, and we went through one yesterday, and we put a stress test on it. And that stress test looked at, what if we have no first year rent growth? What if we can't raise the rents, 2 to 3% over the next couple of years? What if we wind up with a higher interest rate on a property? We run those stress tests on our underwriting to see what's happening. You should do the same. This isn't one thing solves a problem. This is a framework to build into, to build onto, that you continue to grow with. Hey, if there's one thing worth paying attention to today, it's this. Don't let passive investing become your April Fool's joke or your April Fool's moment. If you want a clearer view of how experienced investors actually think through these decisions, especially in today's market, I'm hosting a live event next week. It's going to be a live panel. I'm going to have 4 operators, 4 capital raisers on this call, people that talk to passive investors every day. I think this panel alone has probably raised somewhere around $1 billion in private equity. And we're going to come to you and bring you our expertise on what that looks like. It's called, and I'm running a series over the next several months called the Smart Money Moves. Unlock the next wealth wave of passive investing. And you know what? We are entering this market right now where we're going to see the greatest distribution of wealth that I've ever seen in my life, maybe has ever been seen in anybody's life at this point. But we are going to see the movement of money, the movement of assets that are going to change hands, and the new wealth that's going to be created. But listen, mark your calendar right now. April 15th at 4 p.m. Pacific, 6 o'clock Central Time, 7 o'clock Eastern. It's not a pitch event. We're not raising capital. We're not sharing a deal. It's a structured conversation with experienced operators, experienced equity investors, experienced discussing how to evaluate opportunities and how they think about risk and where they see people getting misled or where they see those April Fool's jokes going on. That's what we're going to cover. We're going to cover more about passive investing, actually what it looks like in the current environment, how experienced investors interpret deals beyond the surface. So you're going to walk away with a boatload of knowledge about how you're going to be able to experience those deals. You're going to walk away with how to look at some common misconceptions and how to break down assumptions. So I want to give you enough knowledge next week on April 15th where you're going to break down knowledge. And you know what? Here's the deal, right? April 15th is tax day. So get those taxes in the mail, jump on this webinar with us and listen in, because there's going to be a lot of context there for you. We're also going to talk about how to think about positioning your portfolio, how to think about positioning your financial position, and not just chasing returns. If you've been considering passive investing, if you've been sitting on the sidelines and you haven't been given enough context, this will help you. You want to come join in. Listen, like I said, we're not selling anything. We're not pitching anything. So if you're already an investor and you're looking for an uptick in your portfolio, if you're looking for some challenges to your current assumptions, then be at this event. If you're already, so you can register. We're going to throw the link in the bio, in the show notes. So make sure that you jump on that link, get registered. I know that between the 5 of us that'll be on this panel, and I'll just be moderating. So we're going to have Michael Guthrie. If anybody knows Michael Guthrie, We're going to have a host of partners on this program. So this won't be an April Fool's, but it's going to give you a full amount of ideas and systems to use from. Things aren't always what they seem. You know, in passive investing, it's not a joke because you're dealing with your hard-earned capital. And we're going to show you how we can be great stewards for you with that capital. It's about building patterns. It's about building structure. And if investors who last in this space are the ones who don't take things into face value, especially when everything looks simple. And let me comment on that for a minute. You know, if you think back to 2021 and 2022, think about all the operators that were in the multifamily space, all the operators that were in this space, raising capital, doing deals. They looked like geniuses because the market was flying upwards. Who's left today? Is somebody that you invested with? Are they still in the business? Are they still around? Well, I can think of 25 names in my head of people that were so active in the multifamily space back in 2021 and 2022. And where are they today? They're not around. And only the stronger will survive. And I have a group of strong men and women that are going to be on this panel coming up next week. So April 15th, 4 p.m. Pacific, 6 p.m. Central. The link is in the show notes in the bio. Don't forget to get registered and be at this event. It's going to blow up. It's going to fill up fast. So as you know, these webinars, you're only allowed to bring so many people in. So make sure that you get there. That's all for this episode. So it's a wrap for this week. That's the Mic Drop Show. Remember, we're here every week, every Wednesday morning, bringing you structure, bringing you assumptions, bringing you real talk, real uncensored talk. You know, this is where I like to break things down for you. So as I mentioned, if you're somebody who's got a question, you want your question answered on the show, throw it in the comment, send me an email, send my team an email. We'll get that question on one of the upcoming episodes. If you're somebody who wants to be on the show with me, reach out, let me know. You know, we always like to interview people and bring people with context around this. I'm going to walk through the full context inside the free web panel that's coming up. So thanks for joining. We'll see you next week. And you know what? Pass this episode on to somebody else. If you're listening to the recording or you've gone back and listened to this again, pass this on to somebody else who you think should hear this. You know what? Give us a little love. Like us, love us. Follow us on YouTube and Instagram and Facebook. Let us know how we can best serve you and connect with you. Thanks, everybody. Have a great day. And this was not your typical April Fool's joke.